Hello, everyone. Yes, you need to be open with Tesla. I think the message we want to send to investors is that if you're going to buy Tesla, whether it was at our old target or our new target today, it has to be more than just cars. It has to be more than just cars times price. The neural pathways we're trying to open up for our clients are on battery supply and software as a service. In this video, the future of electric vehicles meets the pulse of today's financial markets. In this exciting show, we go into great detail about Morgan Stanley's latest shocking report on Tesla's Q4 earnings. Hold on tight as we take you through the ups and downs of Tesla's financial journey. It's a story of innovation, competition, and market forces that is changing the rules for electric cars. We'll talk about the huge change in Tesla's path that was shown by Morgan Stanley's shocking words in this high-voltage talk. What do these new facts mean for Tesla's growth, and how is the EV different? Titan changing its sales in response to brewing market storms. Tesla's recent earnings missed expectations, and the company's growth projections took a sharp turn. We're going to explain what these events mean for investors and EV fans alike. But wait, there's more. We're not just going to talk numbers. We're also going to look into the strategic moves behind Tesla's bold moves. Will Elon Musk be able to lead the company through these unknown waters? What does the future hold for Tesla in a world where electric vehicles are changing so quickly? Stay tuned as we answer these and other important questions. Don't forget to hit the like button, turn on alerts, and sign up for Tesla stock news. You will not want to miss a single moment of this exciting saga. Let us get right to the heart of Tesla's new financial mess right now. Tesla's finances are getting a lot of attention because the electric car giant is having trouble meeting earnings estimates. The company's recent earnings were lower than expected, which suggests that its growth may slow down this year. Our experts stress the important phrase used by Tesla, notably lower, which means that the company's growth rate has slowed down significantly. Market analysts are getting into the specifics of this term, which has investors and experts worried. Even though Tesla missed its revenue and profit goals, the company's gross auto margins, excluding zero-emission car credits, were 17.1%, which was much higher than the 15.7% that was expected. This number isn't just a number, it's a key indicator of how well Tesla runs its business and how well it can stay profitable even when things go wrong. However, the big worry that's getting people's attention is the prediction for 2024. Tesla expects a slower growth rate than the strong growth seen in 2023, especially in terms of yearly car deliveries, which are a key measure of the company's success. Elon Musk, during a conference call, Tesla's CEO talked about the problem. He said that the expected slowdown was due to the company's move to next-generation vehicles. Plans are already in place to set up post-manufacturing locations, starting with their Gigafactory in Texas and then adding more facilities. It's important to note that the overall growth rate of the electric vehicle (EV) market slowed down. While Tesla remained the leader in global EV sales in 2023, it faced tough competition in the fourth quarter from BYD, a Chinese company. Musk also talked about the fast growth of Chinese automakers around the world, implying that they could pose a serious threat to other players if trade restrictions were lifted. Tesla's stock has gone up and down over the past year, with the energy storage segment showing the 30% year-over-year rise. However, investors are still worried about the lack of clarity surrounding vehicle deliveries in 2014. In addition, the Chinese auto market is slowing down, which is having an effect on Tesla's Shanghai Gigafactory and making Chinese EV companies more competitive. These factors are forcing a reevaluation of cell sales strategies and global distribution plans, which is a big change. Adam Jonas of Morgan Stanley has changed his price goal for Tesla to reflect changes in the EV market. This change shows that consumer tastes and market predictions have changed. Today, we'll talk more about Jonas's analysis and compare it to overall industry trends to figure out what it means for Tesla and the EV field as a whole. The recent change in analyst Adam Jonas's price target for Tesla is a good indicator of how the market feels and could mean a change in the direction of the electric vehicle (EV) industry. This change shows that more and more people agree that while Tesla is still growing, it is facing problems that could slow it down. Increased competition and market glut are two main causes of this slowdown. Even though this nuanced view may be different from the views of devoted Tesla fans, it is an important warning for investors and people who follow the industry. This is different from the past, when the EV market's growth story was full of unbridled excitement. This reevaluation and outlook shows how the dynamics are changing in the EV sector, where fast growth and expansion are now being tempered with a more cautious look at the future. How the market reacted to Morgan Stanley's new Tesla price target was urgent and important, which meant that Tesla's future growth prospects had to be reevaluated. Investors and industry experts are paying close attention to this move because they know that a choice like this from a major bank is a sign of bigger trends in the industry. This recalibration has started new arguments about whether the EV market's recent rapid growth can last. Tesla's growth story, which used to be full of hope, is now being seen through a more realistic lens, even though the company is still growing. This is because rising competition and market saturation are becoming major problems. Tesla's price performance has gone down since its previous highs, which shows that people's feelings have changed. Even though the EV market is still going up, it's in a tough spot. More and more people are interested in hybrid cars, which means the switch to fully electric cars will happen more slowly than was thought before. This trend, along with problems in the supply chain changes in the prices of raw materials and government policies, make it harder to predict the growth of the business. Analysts like Adam Jonas are being cautious because the market is readjusting itself. However, Jonas's valuation of Tesla still takes into account the company's many business areas, such as energy solutions and the potential income from full self-driving capabilities. What Jonas's new price means for his finances targets go beyond just figuring out how much a stock is worth. They also show how Tesla's finances and production plans might change, which is important information for buyers and market watchers. Tesla's profit margin, which is a key sign of its financial health, is being closely looked at. If these profits are expected to go down, it could mean that production costs will go up or prices will go down because of how competitive the EV market is. Tesla's production plan is also very important. The company needs to find a way to increase production to meet demand while also keeping costs low. However, the current market conditions of too many electric vehicles, EVs, and changing consumer demand make this harder to do. Tesla might have to adjust its production more closely to match the real demand in the market. This could hurt its profits in the short term, but could lead to new ideas and market growth in the long term. Ross, president and CEO of Gerber Kawasaki Wealth and Investment Management, says that Tesla's story has changed a lot. It used to be a fast-growing company that focused on electric vehicles, but now it seems more mature and is facing problems like supply chain problems that have slowed down product launches and the need to discount vehicles, which cuts into profits. As the EV market gets more competitive and unpredictable, investors need to carefully weigh the facts and think about the future direction of the company. Tesla's CEO's recent request for a large pay raise has made investors think about these changes in the company's story. These different strategies highlight a larger theme in the EV market, finding the right balance between innovation and market pragmatism for Tesla. The main question is whether continued price cuts in response to competition and changes in the market can be maintained. Analysts think that Tesla needs to set a date when most of the price cuts will end in order to keep its margin. Even though Tesla had a record-setting quarter in Q4, it sees tough competition in China, where it needs to carefully balance lowering prices while still keeping healthy margins. The initial bloom of rapid growth in the EV market is giving way to a more complex competitive landscape. Analysts like Adam Jonas are calling out the complicated and shifting dynamics that companies like Tesla are currently navigating. Jonas's comments bring to light the many problems and chances that Tesla faces in this ever-changing industry. The market is complicated,